Hello, listeners, and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. This week, we take a look back at this tumultuous year, but also get the crystal ball out to peek into the future. Our guest this week will tell us what was hot in 2021 and what wasn't. What were the high points in coal, gas, carbon, as well as in environmental markets. Joining me, Richard Sverrisson, to discuss these issues is our old pal, Alessandro Vitelli, who's been covering carbon since the late 1800s. Great to have you back, Alessandro. How are you?
Very well, thank you. Nice to be back.
And a warm welcome to you, Rachael. Rachael Burnett, based in Spain. How are you today?
I'm very well, Richard. Thanks for having me back.
If I can start with you, Alessandro, how would you summarize 2021? We haven't come to the end of the year yet, so maybe there's more out there.
Yeah, I have compared 2021 to 2018. For those of us who've been around at least that long, in 2018, carbon prices sort of quadrupled over the course of a year as the trading markets anticipated the impact of regulatory reform. And here we are again doing exactly the same thing in 2021. Lots of investors piling into the market, mostly retail this time around, and a lot of people betting on higher prices. And that's what we've got.
Retail investors, who would they be, Alessandro?
Well, you've got these new exchange-traded funds, the KRBN, you've got KEUA, you've got Wisdom Tree, you've got Spark Change, all these new funds, exchange-traded products, if you like, which have started to get involved in carbon, bringing the power of the EU ETS to the retail investor.
Very, very interesting. And Rachael, you've been covering the green markets, so to say, as the GOs, PPAs. What for you would be the kind of, how would you summarize the year so far?
I think the biggest thing we've seen this year has been quite a boost in demand for PPAs particularly, but also for GOs as well. We've seen a few countries bring out monthly GO auctions, Portugal and Italy, and the EEX is going to launch a pan-European GO market next year, which altogether will hopefully bring some more transparency to the market. And with PPAs, we've really seen a boom this year. I think we're close to 10 gigawatts of total PPAs in Europe. And about 6.1 gigawatts has been corporate PPAs. So that's a huge increase as more companies want to secure green energy, but also the volatility we've seen in the energy markets in general has led to people wanting to hedge for longer and secure their power at a price that they know they can rely on.
So they've been driven to these deals by the very high price environment, but also the volatility.
Yeah, I think most analysts I've spoken to seem to agree that the high prices we've got at the moment aren't going to last very long in terms of the lifetime of a PPA, which is typically 10 years or so, at least. But the volatility that's behind the high prices we've got at the moment is probably here to stay. So while prices are likely to drop back down again sometime next year, is what I've been told, volatility will continue. And obviously it's very hard for companies, especially ones with high demand, to factor this into their accounting.
Volatility is certainly an aspect of the carbon market as well, Alessandro. But what for you were the surprises of 2021?
Well, the volatility caused a lot of surprises in and of itself. If you think how natural gas prices just soared to unprecedented levels, that's meant that natural gas-fired power has fallen completely out of the money and is a loss maker on all time frames, going out to 2023 at least. As a result, that's kind of meant to me that the carbon price hasn't really had a chance, an opportunity lately to do what it's supposed to do, which is to incentivize clean energy or cleaner energy. If you look at the fuel switching price that carbon has to achieve today to get a gas-fired plant back into the money, it's astronomical. It's up above 200 euros a megawatt hour, 200 euros a ton. So this is a surprise to me that gas has just completely turned the market upside down. Another surprise is that the large institutions, the large financial institutions, haven't really got involved in the EU ETS this time round. We don't have the big pension funds, the big institutional money managers, the Black Rocks of this world. We're still really only dealing with retail level investments in the main. Yes, we have some investment funds, private funds, but we don't have the big names in there. I think the other thing would be the options market and the emergence of the options market as a primary price driver this year more than any other. Traders were betting on higher prices pretty much from the get-go this year. And that has been one of the number one things pushing carbon to new highs. And the last thing I think would be the lack of sellers in this market. We've had a bit of a hiccup with the administration of the EU ETS this year because most member states have issued allowances free of charge to their industrial installations as they do every year, but about half of the total supply has not come to market. Some of the biggest countries have not yet issued free allowances, and I think that's kind of forced industrials who might otherwise have been sellers not to move in this market. And I think that too has been a major factor in the prices rising so fast, so quickly, as in such a short time.
It's very interesting that you say that even though we've got these record high carbon prices, which touched 90 euros a ton very recently, you're still not getting that push to clean energy or that fuel switching price, So I think that's a fascinating element. But though, of course, it makes greener energy much more attainable, does it not?
I think it probably does. The problem is that while gas prices are so elevated, it makes it very difficult for the first, if you like, the first switch from coal to gas to take place. Yes, it makes renewable energy much more attainable, but I'm not sure in the time frame that we're talking about that's actually going to be much of an outcome. I think if you look at the expectations of Nord Stream 2 maybe starting up at some point early next year, gas prices might relax, and then we'll be back to the coal to gas switch and not necessarily the whatever we've got straight to renewable switch, because that takes more time to do.
How about for you, Rachel? What were the surprises of 2021?
I think in the geo market, Norway announcing that it wanted to leave the EU system was, I know that they had been talk about it before, but I think that certainly was a surprise to me. Although, having spoken to a number of market participants, it seems to be something that a lot of people are taking a more long-term view on. It's not likely to happen very soon, and there's been some talk that it may not actually happen at all. But certainly this announcement, because Norway is the biggest exporter of GOs, and hydropower GOs from Norway are a benchmark for the entire system. So it would be quite huge if they were to leave.
And didn't Statkraft, Norway's biggest utility, say as well that if this does go through, they would be forced to buy GOs from elsewhere in Europe to cover some of their plans in Norway?
Yeah, which would be quite ridiculous in a way, since they've got so much clean power available in their own country. But yeah, as you say, they said that they would have to start importing GOs. So that would have a huge effect on the market, a real shift.
And how about the high points for you, Rachel, in the sort of environmental markets in Europe?
I think the increase in demand is really the high point for all the green markets. In terms of developing new capacity for renewables, there was a slowing due to COVID, but things have really picked up in the kind of, I wouldn't say aftermath of the pandemic, because it seems to be ramping up again, doesn't it? But as the year has progressed, there's been a real increase and continuation of developments, and with so many PPAs being signed, and we've also seen a huge increase in demand for GOs as well, which has likely been led by things like the Fit for 55 announcements, things like the COP summit in Glasgow. These things have brought attention to the green movement, and I think a lot of companies really do seem to be taking this on board and taking their own initiative. They're not waiting for governments to set out regulations. They're getting on with things. I mean, Amazon in particular has signed a huge amount of PPAs this year, and they're one of the biggest, well, I think they are the biggest contractor of renewable energy in the world and in Europe. So, and they're leading the way, and it paves the way for other companies to do the same, and it sort of sets a precedent.
I mean, they have a lot of financial clout as well.
Of course, but we're also seeing in the PPA markets a rise of aggregated PPAs, which is where groups of smaller companies with perhaps weaker credit credit scores and less demand individually. They're grouping together to sign PPAs as a kind of unit. And initiatives such as that are really positive because it can bring new companies into the market that perhaps wouldn't have the experience, confidence, and background to sign deals on their own. So it isn't just the huge tech companies and ones with really large demand. We're seeing a lot of new entrants as well.
Because there's a huge amount of potential out there, a lot of small and medium-sized companies who want to procure green energy. For you, Alessandro, what were the high points of this year?
Well, I think the high point was certainly the Fit for 55 package that came out of Brussels. I think that to me is the game changer, which triggered the price rise that we've seen this year. To me, the Fit for 55 package, and in fact, the whole Green Deal is sort of A to Z, soup to nuts, a turn upside down of Europe's economy and how we produce things, how we consume things. That's going to be fascinating to see how it plays out. And in terms of the carbon market, it's an agent for higher prices going forward. Clearly, everyone has seen it. The EU itself has sent signals as to what price it thinks we need to reach, and sadly, for them, the markets kind of anticipated that before they expected it. So that's to me the big deal this year, the Fit for 55 package.
And it's be quite interesting to see how this moves forward, given the context of, as you've mentioned, these extraordinary high gas prices and the so-called energy crisis at the moment. Will that propel the move to a greener economy much faster, or will it slow it down? I think those are the key questions. But there's also been some rumblings of discontent with these very high prices. So if I can ask you, Alessandro, what are the disappointments of the year?
Well, that to me is the big disappointment this year, that so many EU member states are playing politics with the EU ETS. We know the Bank of Spain, in fact, one of the countries that actually has complained about it the most, the Bank of Spain calculated that the increase in EUA prices is responsible for about 20% only of the increase in energy costs for consumers. And yet the EU ETS is being targeted like it's public enemy number one. And so some of the words that are coming out of some member states are really ill-informed, I think it would be appropriate. They're yelling about speculation. The problem is the EU itself has signposted the way to higher prices. You've got Frans Timmermans, who's been talking about markets need to go up. Head of the Commission has said also, Ursula von der Leyen has said that we want higher prices. The EU's hydrogen strategy document targets higher prices. It's not as if this is a surprise to anybody. And so the fact that people are worried about speculators anticipating the higher prices is kind of, I don't know, it's inappropriate. And you have to remember also that it's not, speculators do not act in a vacuum. There are other participants in this market who are buying equally aggressively. I mean, we've known for a number of years now, and I know Montel has reported it. Utilities like RWE have said publicly we're financially covered on EU carbon allowances out to 2030. Now that means that they're in the futures market or even in the options market, so they're doing just the same thing. And I think any compliance entity that doesn't cover itself in that way is probably missing a trick. So I think the EU, when it considers how to intervene in this market, and when member states talk about intervening in this market, they really need to be a bit more careful with their choice of language and do their research a bit better.
Because this is how markets work. And anyway, where's the distinction between hedging and speculation? Where does one stop and the other one start? I'm not sure whether that's such a clearly demarcated line there.
Yes. There's a study that's just come out in the last couple of days from the Potsdam Institute, which tries to identify a little bit more precisely the role of speculators and their size in the market. And I would recommend that as a piece of reading material.
Absolutely. Thanks for that, Alessandro. And Rachel, what were the disappointments for you in this year?
I think with GOs, the UK Brexit situation, it came into force in July that the UK GOs are no longer eligible for export to the EU. So that, while not unexpected, is a kind of disappointment, I guess, on a personal level as well as Brit living in Europe. everything to do with Brexit, I find a bit depressing. And I think in the markets in general, I don't know if it would be a disappointment, but certainly a negative impact for a lot of developers has been a rising cost in constructing and completing projects due to a rise in the cost of raw materials, a rise in shipping costs, and also, particularly for solar, there's been a real increase in demand from China and India for solar panels. And there's also been some political motivations as well, because China's the biggest producer of these solar panels in the world. So most of the solar projects, even in Europe, get their panels from China. And because of political situations, people have been more reluctant to take them because of human rights issues. So this has caused quite a headache for a lot of developers, from what I understand. And it's seen the costs go up for the first time in a number of years for developing solar and wind.
Alessandro, have you over the course of the year, have you heard any sort of interesting anecdotes or some sort of numbers regarding the carbon market?
I would offer one number to start with, which is something like 6.5 billion, which is the number of EUAs that have been traded in the front December contract this calendar year. That is already 1.5 billion EUAs more than last year, and we haven't finished the year yet. And if you compare where we stand today, 6.5 billion, with where we were, let's say, in 2010, we never even got to 2 billion tons by this time of the year. It's an extraordinary explosion in trading activity. I mean, a lot of it obviously is churn. But if you think about 6.5 billion tons, that is 4 times the cap on emissions in 1 year in the EU ETS. So this the market really is beginning to mature and develop into, a significant market in any sense.
Yeah, absolutely. That's a staggering number. But let's look a bit forward. I mentioned in the intro about getting the crystal ball out. So, Rachael, what do you think will be, the key drivers next year, or what will you be looking at in particular?
Well, I think the trend around the rising demand is expected to continue, if not increase, next year. With the Fit for 55 directive, with GOs, there was a new guideline that countries must allow GOs to be issued for all renewable energy, even if the sites are under a subsidy. So at the moment, countries such as Germany weren't allowing producers that were receiving subsidies or government support to issue GOs, but this is going to change. And I've been told that we could see a 25% annual increase, around 200 terawatt hours extra, come into the market. So that will be huge for GOs. And for PPAs, similarly, the EU has said that countries have to remove any barriers to signing PPAs. A number of countries still have regulatory issues that either prohibit or make it very difficult to sign PPAs very easily. And so the new guidance is that they have to promote and at least not hamper these deals. So there's really going to be a focus on more and more PPAs. And I think the huge increase we've seen this year is only going to rise again next year.
So it's going to be very much focused on what's coming out of Brussels in the coming months then as well.
Yeah, absolutely.
How about for you, Alessandro? What will be the key drivers for the EU ETS in 2022?
The main thing is going to be the plant economics for power, because we're currently in this environment where coal is incentivized to an immense extent, and gas is really not. So I think watching how that plays out as Nord Stream 2 maybe approaches coming online and delivering gas to Europe finally, that will be very interesting to see how plant economics adjust to that. At the same time, however, I noticed that yesterday Uniper announced it was going to delay the closure of its Scholven B unit, which I think could be the first in a number of such announcements, because as long as coal is making so much money for utilities, it would be foolish to close a plant down if it's scheduled to do so in the next year or two. So I think we should watch out for something like that. Apart from that, I think also we need to think about Fit for 55 and how that progresses through the European Parliament and into the sort of co-legislation process between the Commission, the Parliament, and the Council. And I also think we need to keep a careful eye out for that in-depth report that will come from ESMA at some point in the first quarter, which will be an investigation into the role of speculative trading in the EU ETS.
ESMA being the European Securities and Markets Authority, the sort of so-called watchdog, isn't it?
That's
the financial
right.
watchdog.
Yeah, that's right.
Great. And if I could ask you then, Alessandro, a key element here in gas, in coal, in carbon and power is going to be Nord Stream 2 and when it comes online. When do you think it would, I'm putting you on a spot here a bit, but when do you think it could come online or start delivering gas to Germany?
I'll say March.
March, okay. And Rachel, what are your thoughts here? What are you hearing?
Yeah, there's so many rumours flying around, but I think the latest from Germany has been that the EU regulations has to go through the whole process, and yeah, I think Q1 next year would be optimistic, wouldn't it? I'll go with Alessandro.
Okay, great. Thank you very much, Alessandro, and you, Rachel, for joining the Montel Weekly this week.
Thank you.
My pleasure.
And our next guest is Montel's own coal and gas editor, Laurence Walker. A warm welcome to you, Laurie.
Good morning.
How are you doing?
Yeah, not so bad.
Excellent. We're looking more at a review of this year and a little bit of an outlook for the following year, so 2022. How would you summarise this year, Laurie?
Well, I guess for both markets, there's been a lot of similarities in terms of price moves. We've seen, and I guess price drivers as well. So we've seen sort of super high prices, absurdly high prices, you could say. Again, not just in Europe, but around the world for the coal and for the gas. Supply concerns have been a big issue, very often involving Russia, but also elsewhere. There's been production issues for both fuels. There's been obviously concerns about stocks for both fuels. So there's kind of supply concerns has been a big issue. And then just the level of demand as well has been very, very significant again. And what we've seen very pronounced this year has been the sort of the tug of war between Europe and Asia, which we've seen for both markets. I think it's something coal is to some extent used to. It's something, the interplay between Europe and Asia is quite a common thing and has been for a few years. For gas, I think it's almost become a bit of a shock. It's almost kind of, Europe's almost quite indignant that Asia's taken so much LNG this year and at a time when we need it as well. So yeah, I'd say, high prices, supply concerns, strong demand are the big issues, and it's been for both markets this.
Absolutely. And we heard earlier in the pod about, despite record high carbon prices, around 90 euros a tonne, we're seeing no fuel switching from coal to gas. In fact, you've seen a boom in coal-fired generation. I mean, there's been real people even extending coal plants as well.
Well, yes.
The lifetime of coal plants.
Yes. I mean, it's just really been a sort of a rebirth for coal, really. We've had
rebirth of coal.
The rebirth of coal. Yeah. Certainly. I mean, even this time last year, you couldn't have envisaged this. Coal prices are up hugely this year. Gas prices have been up astronomically, you could say. I mean, we're talking 20 euros or so a megawatt hour at the start of the year for gas, and then we've got peaks of, where do we get to, sort of over 160 or so. So in October. We couldn't have envisaged this, and because again the sheer level of the gas prices, it just keeps coal in the money, and it's going to be in the money for a while to come because of such high gas prices, and that, as you say, that's despite carbon also hitting record highs.
So apart from these dramatic price movements upwards, or very, very strong prices, the so-called energy crisis, as we are calling it, or some commentators are calling it. Were there any other surprises this year in the coal and gas markets that you could sort of pinpoint, Laurie?
I mean, I could say certainly there have been surprises for the market and for people all through the different chains. And when you're talking about the fuels market, there's obviously many different components. So we've got the mining end or the production end for the gas. You have all the logistics infrastructure, things of this sort. So, I mean, for example, yes, the logistics infrastructure, I think, has been caught off guard. Certainly in Europe, we've had issues where there just simply haven't been enough barges. The barge operators were anticipating a big decline in coal usage. They haven't maintained their barges. Maybe there hasn't been enough capacity. They've rented them to other areas, to the grains, to the iron ore, to scrap, whatever. And so now we're seeing squeeze on coal arriving at European plants. In this case, not because the coal isn't actually there, but because it's quite difficult just to get it. That last leg of the journey. And likewise, rail hasn't been ready for this as well. And these are things that need to be prepared in advance. The operators look ahead, a year or so, what's going to be happening, and obviously a lot further.
You can't build a barge overnight.
Well, no, you can't create it. And then, yes, and also, this coincides with the recovery from COVID across Europe. So industry has been, as a whole, improving. So this has added to kind of inland congestion, you could say, and demand for carrying. So I'd say this is a surprise, certainly for members of the industry who maybe have, they look at certain areas. And yes, obviously the prices in general have been a surprise, and it's just not, it's just taken people off guard, I think.
What have been the sort of high points for these markets this year? You could talk about the price movements being, dramatic and very surprising, but were there any sort of high points for you this year, Lauren?
You can't deny it's been an interesting year, and it's certainly one of these sort of years where you can actually finally, sit down with your friends or with your family and discuss the energy markets, and their eyes don't glaze over and they don't sort of take your wine away from you. I think it's been the level of things going on at the same time. So it's just one of these. It's a year where you can't really. Certainly, there's the unknowns. There's the issues with China, for example. We're never quite sure what's going to happen in terms of demand there. Didn't begin this year, but it began obviously in November or so last year, where China stopped taking Australian coal. So from the coal market, one interesting development has been the fact that since China isn't taking coal from Australia, they've been taking stuff a lot more from places like Colombia, from Russia, South Africa even. And this has seen kind of trade flows change. And it's also added to the extra costs we're having to pay because we're having to compete with China effectively for kind of coal we're used to getting. I think it's interesting, again, just the fact that LNG has been following similar trends again, that, China has this demand, Asia has this demand, and we're having to battle them for it. So that's been interesting. Obviously, the whole Russia scenario is massive, and just seeing how effective or how influenced the market is by what Russia is doing, even if there's no material impact on flows.
We're talking gas here rather than coal.
Yes, yes, we are. Although I would add, again, it doesn't get spoken so much, but Russia has also, regularly been, I wouldn't say holding back coal, but certainly there is a lot of talk of the fact there is maybe more coal than is being released, and that they will maybe wait for the right price, which is kind of similar to the game Gazprom would be playing with the gas. And you could argue this is just how the market works, and this is what what does happen. They don't have an obligation, maybe unless something is already sold. But yes, I would say, certainly, we saw the peak prices we saw for gas. Putin came on and said, okay, next month we can provide more gas if it's required. The prices just dropped like a lead weight, and I think it shows, yes, kind of how reliant we are now on Russia for supply for both these fuels.
Exactly, and then we discussed earlier in the pod as well what that could mean for the energy transition. Will it move quicker, or will it actually slow down as people see gas as the transitional fuel? But I just want to ask you as well, what do you think then? What will be the key drivers for coal and gas markets next year, Lauren?
I think the thing for both throughout this winter, we're going to be seeing similar drivers as we've seen for a while. The big question over Nord Stream, I think it's obviously taken as read. It won't be on this winter. So that will not necessarily be a factor for this, at least for the first part of next year in terms of immediate supply. But the weather is going to play a big role. So seeing how severe the winter is, and that again, as we've spoken earlier about the interplay between Europe and Asia, is going to be important to track trends. Weather trends, both in both basins, and that also moves on to things such as rains. So we're already starting to see rains affecting production in some of the big coal-producing areas, and so it can not only be obviously a demand driver, but also a production destroyer.
Is this related to La Nina, or is it kind of is it interrelated or not
yes,
really?
Yeah. The La Nina does traditionally involve heavier rains in a lot of these producing countries. And so, we've certainly seen more rain in Australia, in other parts in Indonesia, and more recently over the past couple of weeks, even South Africa as well, which is struggling to get coal out. So yes, there is that, and that has the other effect of colder weather in the Northern Hemisphere, which drives demand. But obviously the extent of that demand is going to be very important in the first half of next year. Yeah, the saber rattling from Russia again is going to be important, and as we can see, the market will react to what it does. Nord Stream, again, later in the evening when it does come online, does that mean ultimately more flows, or does it mean redirected flows from other routes?
You're mentioning saber rattling from Russia and Nord Stream 2, but what Rachael and Alessandro expected flows to start coming into Europe in around March. What are your expectations?
Through Nord Stream
2.
Potentially, if they get all the writing, if they get all the permission by that stage. I mean, there's forecasts of, people could say anything from March to autumn. So it's not for me. Obviously, we can make a guess, we can make an estimate, but ultimately it's with the decision with the Germans, with the how quickly the Russians get things moving. And again, as I say, even if it is up and running, if that effectively means more gas coming. So I think until we actually see flows coming through the pipeline, I think it's going to be quite hard to really gauge the impact.
So, Laurie, thank you very much for joining the Montel Weekly Podcast this week.
Thank you.
Dear listeners, we will now take a break over the Christmas and New Year period, returning on the 7th of January. All the best for the festive season. Stay safe and healthy. Goodbye.